Good afternoon and welcome back. You're watching Business Arena here on TVP World. I'm Aleksandra Marchewicz and these are the latest business headlines. And we start with unrest on the streets of Warsaw, where Polish farmers gathered to protest. The protesters voiced their dissatisfaction with a number of EU and domestic policies, despite agriculture being one of the biggest beneficiaries of Poland's EU accession.
A new year and a new farmers' protest in Poland. The date is no coincidence. The protests were planned on the day of the formal inauguration of Poland's presidency of the Council of the European Union, when a number of high-ranking EU officials will arrive in Warsaw.
For the farming sector, the situation is looking grim. The Green Deal, the Mercosur trade agreement, it doesn't benefit farming. We hope Mercosur won't be signed and implemented. It would significantly harm our farming sector, forcing us to slowly shut down agriculture and livestock farming.
With more than 20 various farmers' organizations joining the protests, they were united under a single slogan: 5 times stop. The farmers opposed the European Union's trade agreement with a group of South American countries known as Mercosur, the EU's Green Deal policies, the import of Ukrainian agricultural products into Poland, as well as the destruction of Polish forests and hunting, and the perceived shutting down of the Polish economy. The EU's deal with Mercosur, finalized after over 25 years of negotiations, requires approval from both the member states as well as the European Parliament. However, experts say the farmers' fears are exaggerated.
The things that are most impactful for the Polish agriculture sector, poultry and beef in this case. So this is something that could be competitive to our exports. They are far smaller than what Poland currently exports to the EU.
The Mercosur deal is the latest point of controversy voiced by the farmers, as previous protests focused primarily on the implementation of the EU's Green Deal regulations and the Ukrainian agricultural imports, threatening the Polish market with dumping prices.
To, co chce zrobić obecna przewodnicząca I obecna większość.
What the current president of the Commission and the Parliament majority want is a destruction of farming in Europe, and that includes our Polish farming. In fact, it's the German policy which is being implemented, not the farmer's policy, especially not that of the Polish farmer.
Bo bezpieczeństwo żywnościowe jest najważniejsze.
Official data, however, does not indicate a serious threat to Polish farmers from EU initiatives. In fact, quite the opposite. More than 30% of the European funds Poland has received since its accession to the bloc have been geared towards agriculture, with 2/3 of that money going straight to farmers in the form of direct payments. At the same time, Poland has become an agricultural superpower, with Polish food exports reaching 52 billion euros, a tenfold rise since 2004.
The Czechs just received some lukewarm news to start the new year. The Czech Statistics Office reading for GDP growth in the third quarter of 2024 sees the indicator going up, albeit far from historical highs. The estimated Czech economy's economic performance in the third quarter of 2024 was revised upwards, with real GDP increasing 1.4% year-on-year. The revisions of GDP components were only moderate, with a less pronounced negative contribution of changes in inventories and slightly stronger government consumption. Household spending was the main driver of overall growth, while fixed investment and inventories were the main drags. The Czech economy has grown by 0.5% in the second quarter of 2024, a far cry from 4% which the country managed a couple of years ago. So Central Europe's factory economies have powered decades of growth, but fresh Czech GDP figures hint that the old model might be running out of steam. So could new policies and innovation reignite the region's momentum, or is a deeper overhaul needed? Stay with us for the bottom line, where we'll explore what's next for Central and Eastern Europe and how leaders can steer these economies into the future. On the back of Thursday's disappointing figures coming out of the manufacturing sector, the Polish Statistics Office released a positive surprise to kick off the new year. Flash figures published today show lower than expected inflation.
The numbers are in. The December CPI reading came in at 4.8% year-on-year. That's 0.2% lower than the expected 5%. The source of the positive surprise? Food prices. They rose just 0.2% month-on-month, which was below the seasonal pattern and below expectations of around 0.9%.
Had they came at 0.9, 0.8 or 0.9% month on month, as we had forecasted, it would have been 5%, and there would not have you wouldn't have a story, basically.
So, can we start revising projections down for the following months? Piotr Bartkiewicz from PKO Bank says not so fast.
Seems like it's this December print was a fluke and or a pause in an uptrend, because we have plenty of reasons to expect higher food prices.
Poland experienced some pretty bad weather last year, which translated to limited supply in certain agricultural products, and this limited supply will have to hit prices at some point. We also can't forget last year's increase in the VAT rate on food from 0 to 5%, which retail chains are still gradually passing on to customers. This process will continue putting upward pressures on food prices. Going forward, the consensus remains that year-on-year inflation may still climb to 6% in the next couple months, and it looks like it won't come down below 5% until July. So now, let's get to what everyone really wants to know. When can we expect the National Bank of Poland to lower interest rates? Unfortunately, no good news here. Previously, the expectation was that the central bank would begin easing by the start of Q2, but there's a growing camp at the Monetary Policy Council, supported by Governor Adam Glapiński, which is now talking about late 2025, and some are even talking about 2026.
So a late start to the cycle is more likely these days, and that's what we are forecasting, and that's what we are expecting.
The Statistics Office will publish detailed inflation data in mid-January.
The Polish government would like to request European funds for the development of nuclear projects. Now, if approved, this would mark a historic shift in the EU policies, which has so far avoided financing nuclear projects and the development of those technologies with common resources.
It might be a good idea to loosen up the rules on nuclear, and and we all know about our ambitious plans to invest in nuclear in Poland. It would be much facilitated if European funds could be used to invest in those tremendous projects. On this very topic, we are very like-minded with, for example, the French, thinking that at the times when we really need to revise some of the commitments that we have made and adjust them to the current needs and current challenges.
And that is all of our business news updates for today. But for more business stories, check out tvpworld.com.